Welcome in to Make Your Money Matter. I'm your host, Barrett. Today on our show, we're going to talk about 3 ways that you can minimize your taxes on your investment gains. But before we get started, make sure to smash that subscribe button, hit the notification bell so you don't miss a single episode. All right, let's get into it. So for nearly 2 decades of being a financial advisor, there are many proactive planning tips that I'll bring up, but 3 today that we've used as investment managers to help our clients mitigate taxes, obviously in coordination with a client's CPA and your tax advisor. These are good options to bring up to them and your advisors to make sure that they're doing this because, as many of you know, it's not what you make, but what you keep. And I think oftentimes investors, they overlook the critical role that tax efficiency can play in successful retirement planning. And we're in tax season, all right? It's important, friends, that we bring this up as ideas because the strategic management of your investments can help you minimize what you owe and really maximize what you earn. And really, you want to, build this nest egg that will obviously last longer for you and ultimately your legacy. But it takes proactiveness. It takes not being reactionary or just meeting with your CPA between January and April every year. We have to be proactive to make it work. You can't wait until next year's tax season to worry about this and maybe, try to play catch up because again, I'll say this again, proper tax planning means looking at the big picture, assessing your goals, and finding opportunities to reduce the tax burden. So 3 moves you can make to potentially lower your tax bill. Number 1, and I've talked about this often on our show, and I'm not just going to bring it up here, but Roth Conversion. I think one of the most powerful tools to have in your arsenal is looking at this idea. Doesn't mean it's for everybody, okay? Basically, what we're talking about here is converting a traditional IRA to a Roth. Now, obviously, when you talk to your CPA about this, you'll be paying taxes at current ordinary income tax rates when you convert it. However, if you do your planning right, that can become a benefit for you later if you feel like, say, you're going to be in a lower tax bracket when you retire or choose to stop working, as well as you might have more time on your side to make sure that you can make up in the investments and manage that and make up on your taxes that you had to pay on the conversion. So I think considering a Roth conversion, it always has to be number 1. Again, not saying it's for everybody, but it's important. Number 2, charity. Look, you want to make the most of all your charitable giving. You can look at things like donor advised funds. You can look at charities directly. However, however it may play out for you, it's important that you look at this because this is a big one, all right? Now, for those of you who don't know what a donor advised fund is, it's like an investment account, only it's designed specifically to grow money for charitable giving. I think there's 2 things that have to benefit, for you for a donor advised fund, as they call it a DAF. You can stack multiple years worth of donations into one large donation that lets you put you over what currently is the Tax Cuts and Jobs Act threshold for itemization for your deductions in, just 1 year, which obviously I think more everybody provides an immediate tax deduction. Again, talk to your CPA about that. The second part about a DAF I want to bring up is, when they're investing that money, right? The DAF, the sponsoring organization, they're investing it so they can continue to also grow tax-free until it's paid out tax-free over time to the qualifying charities that are inside of that. Now, with a DAF, all right, you can maintain your commitment, I should say, because you have to be a charitable person, all right? And so it doesn't mean if you're not that, this is a bad thing, but I want to bring it up because many people are deal with our charitable giving with our clients, but you can maintain your commitment here through a DAF to charitable giving while optimizing your tax saving both in the current year and throughout your lifetime. And number 3, and this is really important, a large part of this lands on investment managers or advisors. So I put this one in there because this is what we do here at One Capital Management for our clients, and that's reducing your capital gains with tax loss harvesting. I think for many people, we're coming up on the big game here, Super Bowl, right? It's natural for us as humans to root for the winners in your portfolio, for example. But sometimes, friends, investments that are losing value can actually do well for you. And here's how we use tax loss harvesting as an ability to manage our clients' capital gains taxes. By doing so, we're able to basically sell long-term positions that have a loss and replace them with a similar but not identical investment, and then use that loss to offset the taxes on any realized investment gains for the same year. Now, real quickly, for those of you, with tax law here, if your losses exceeded your gain, you can actually use the more losses in excess up to $3,000 of ordinary income to carry forward with any remaining losses in future years. I think this strategy really is important to talk to your advisor about. If you have a taxable account, which is like an individual account, a trust account, brokerage account, things that aren't tax deferred like an IRA, it's important to make sure you're doing so. So those are the 3 that I would consider. Considering a Roth conversion, making the most of all your charitable giving, and looking at reducing your capital gains with tax loss harvesting. But all of those, everything what I mentioned, right, needs to be done with proactive planning. Having an advisor with you, having counsel, coordination, and integration, obviously with your CPA, maybe even your estate planning attorney, your investment advisor, all those things matter to make these things work for your benefit, okay? Hey, I hope you enjoyed that today. If you did, make sure to subscribe to our channel so you don't miss a single episode. And always remember to make your money matter.